And we're live. Welcome back to the Better Than Bitcoin podcast, where I talk about the future of money. I'm your host, Jamie Dabowskis. I'm in sunny South Florida right now for the holidays. Well, it's dark outside, but still sunny in South Florida. And I'm here for the holidays, and a lot has happened to Bitcoin over the past week, so let's talk about it. For a little market recap, over in the short term, Bitcoin looks very bullish. It appears that it will revisit the small high of 7,500 that happened on Wednesday the 18th. After the last episode of the podcast, Bitcoin declined from 7,100 to a new low of 6,425 on the Bitstamp exchange. A day after that new low, Bitcoin pumped from that low of 6,425 to 7,450. So that's a $1,000 pump, which shows there's strong resistance at the $6,400 level. Now the possibility that we might see lower lows is still on the board, but I now believe that there is a higher chance that we go higher rather than see new lower lows. There is still a bullish divergence present on the daily MACD and RSI, which is also pretty good. Even though we saw new lower lows in price, the long-term bullish view is still present unless we break below 54.24, which is the 78.6% retracement from the $14,000 high in June of 2019. So that's a little market recap. Now I'm going to talk about, I've tried to learn other ways to analyze crypto charts. By this, I mean technical analysis techniques. I've come across two new indicators I've been trying to use, Bollinger Bands and Demark Indicators. A Bollinger Band is basically a set of lines that's plotted between two standard deviations, positively and negatively, away from a simple moving average of the price. And the purpose of these Bollinger Bands is essentially to show how overbought and how oversold the market is. So what I've been doing is placing two sets of Bollinger Bands on top of each other, one set with a standard deviation of 2 in the color blue, and the other set with a standard deviation of 1 in the color red. So in effect, I get a Bollinger Band with 4 different channels. I'm going to show you right now what these channels look like. Essentially, here we have these two neutral channels right here, and we have the top channel and the bottom channel, which usually tell me things. Right now we're in the neutral channel, so I can't really say a lot about where it's going based on that or how oversold that market is. But hold on a sec, technical difficulties. Okay. So basically, what it tells me what this little technique is. If the candlesticks stay in between the very top channel, it tells me the price action is very overbought and has strong momentum upwards. If the candlesticks stay in between the very bottom channel, it tells me the price action is very oversold and has strong momentum downwards. The middle two channels, like I said, are seen as neutral channels. I can't really tell anything by being inside that little middle channel or the two middle channels. So my dad sent me another indicator. My dad sent me a daily Bitcoin chart with what is called the Demark Indicators on it. And I asked him what those were since I have absolutely no idea what I was looking at. I was just looking at a chart of Bitcoin with a bunch of numbers on it, and I was confused out of my mind. He didn't really explain it that well, and then a day later he came back from work and handed me this 70-page paper, slideshow printout, front and back, of what's called a Bloomberg Market Essentials Technical Analysis of Demark Indicators. I read it all last night and got the general gist of how Demark indicators work and what they're supposed to tell you. Basically, Demark indicators are numbers placed under and above candles to count a sequence of declining or rising trends. So I can show you real quick. So if I delete the Bollinger Bands off there, you get just the Demark indicators on here. You can see a sequence starting from 1, 2, 3, 4, 5, and then if the sequence is broken, it restarts back to 1. This is a little script I found in TradingView of some random guy made a script. I don't really know to trust the math, blah, blah, blah. Take it with a grain of salt on here, but I wait until my dad gives me his charts with Demark indicators. So hold on. Going back. Okay. So basically, Demark indicators are supposed to tell you how exhausted a trend is. A bearish sequence starts once the market records the close price greater than the close price 4 bars or 4 periods before, immediately followed by a close price that is less than a close price 4 bars before. I know it sounds confusing. It's basically a formula. I could show it to you on the YouTube. For the YouTube people are watching this instead of listening to it, I can show you this. I don't know if it would be flipped on the camera, but this is like the little formula for a bearish price flip. That's what I'm trying to explain. Basically, candle T-1 is greater than candle T-5, followed by candle of T, which is the basis candle, is less than candle T-4. It's a formula. There's a formula. The same formula is for bullish sequence starting, but greater than and less than and stuff like that is all flipped on the bearish, or the bullish is the same as the bearish. They're just flipped either way. So yeah, once the sequence is started, you start counting the candles 1 through 9, which can sometimes extend to 13, only if the close on that numbered candle is less than greater than the candle 4 periods before, depending on if it's bullish or bearish sequence. If these conditions aren't met, you stop the count and restart the sequence setup. If a sequence is completed all the way to 9 or 13, then it shows a trend change is coming. This is usually a buy or a sell indicator depending on the sequence type, if the sequence was a bullish sequence or a bearish sequence. So now, since I've learned these Demark indicators worked, I pulled back up the chart my dad sent me and I correctly read it. The chart showed the day before the $1,000 pump with a count of 13, which shows that Bitcoin was very oversold on the 17th of December. Obviously, on the 18th of December is when that $1,000 pump came. So it was a very good indicator for a bottom. But now, since I use that script on TradingView, I found that it's not a very good indicator of a top, because Bitcoin likes to hyperextend above and keep going and keep going and keep going. Everyone loves to see a higher priced Bitcoin, but it wasn't very good at counting that, because it goes when Bitcoin extends, it can extend way beyond 13 little counts of higher and higher and higher and higher and higher. So it wasn't really a good indicator at highs, but I saw it had a little history of good indicator of lows. So I found that script on TradingView that somebody made public, and it places Demark indicators on any chart. I don't know whether or not to trust the code of some random person, but so far I've used it and taken it with a grain of salt. Also taken it with a grain of salt because I'm still new at using the indicator. And yeah. So that's all for episode 9 of Better Than Bitcoin podcast. Don't forget to like the video and subscribe. Follow me on Twitter at Jamie Damascus. I know it's a short episode. Wasn't really a lot of news I wanted to add in. And nobody's in the house right now, which makes it a perfect time to record. So I have like a small window. Anyways, follow me on Twitter at Jamie Damascus. Throw up on the screen again twice. And peace out.